Great. Thank you, Congressman. You're on a tight ship, but it's good to be here. I've really enjoyed the day so far. I always learn a lot. I know we just got finished with quantum computing and AI, so we're going to ease into something a little bit simpler. Maybe. But by the way, I advise Robert a little bit. He takes my advice sometimes, but it's not on cryptocurrency at all, not investment advice, to make that clear. But thanks again for the quick introduction. I thought before we sort of jump into the substance of things, well, let me ask folks out here, how many people actually have purchased or used cryptocurrency in this room? All right, a fair amount of hands, not too many. So, but I thought we'd just kind of reintroduce ourselves a little bit and kind of what we've been doing and how we came to crypto. And maybe, Heath, since the Congressman started with you and you're former chairman of the CFTC, Commodity Futures Trading Commission. We'll start with you. Thanks.
How did I get to crypto? Wow, that's a great question. And I would say, like, for me, it was about the same time that I was working with the congressman on CFIUS issues, thinking about national security, thinking about the future of the U.S.-China relationship. And during that period, I worked at something called the Financial Stability Board, or I was the U.S. representative. So it meets in Basel, comes up with financial regulations. And something remarkable had occurred there that at the time, Carney, President Carney of the UK Bank of England, said there's this thing going around with Facebook where they're going to create a new global currency that will overtake everyone's currencies around the world, and you need to know about it. That was basically my first introduction to crypto and the idea of having money that went over the internet on public blockchains. I had heard of Bitcoin, but at that point it was sort of a fad. But it was then when I realized that this is going to be big. Going back to the analogy too, some of the analogies that people were throwing around, because some of this stuff, now this looks like a pretty sophisticated audience in terms of crypto. Many of you raised your hands as having cryptocurrency. But for others, this may be somewhat new. How do you think about it? Because there's a lot of advanced computer technology here. One way I've thought about, well, what's the difference between the current financial system, which some people would argue, well, it is digital in many ways, right? We have a lot of technology. We are sending money by our phone. It's not necessarily cryptocurrency, but it's a series of closed networks. When email came out 30 some years ago, and for those of you that had email accounts back in the early 90s, you may remember that you could only send an email to someone else who had the same email account company that you did. So if you had AOL or whatever, you could only send emails to those people. Over time, given public internet protocols, now you can send an email to anyone in the world at any email address. That's not the case with money. It's a bunch of closed systems still. And what this technology allows to happen is for us to basically send money now all over the world over the internet itself, as opposed to these proprietary closed systems, many of which are very big. Many of the bank markets are very big, but you have to be a bank to be a member, and ultimately there's banks in between doing debits and credits. This allows you to send the value just like you're sending an email. So that's a big difference conceptually. That's kind of the way that I think about it. So what are the different kinds of cryptocurrencies, so to speak? Well, I think you did a great job, G, talking about different ones. You've got things that are speculative investments. Let's be honest here. There's a lot of volatility in something like Bitcoin. You probably aren't going to buy a cup of coffee with it, right, anytime soon, just like you wouldn't buy a cup of coffee with Microsoft stock. And NFTs, which are unique assets, artwork, stuff like that. But what's sort of the future of money? That's what the panel's called. Well, it's as simple as actually taking currency that we have today, fiat currency, and tokenizing it. So it performs the same way that basically an email does. And that's what stable coins attempt effectively to do. They take, in our case, Circle takes dollars. You come to Circle with $1, we give you a digital dollar. We take that dollar that you gave us and we invest it in very highly liquid, safe assets, US Treasury bonds, and cash in bank. You can then use that dollar anywhere you want, and when you ultimately come back, we give you the original dollar back. We obviously do this from a wholesale standpoint, not a retail standpoint, but the result is that we have $25 billion that are circulating in every single one of your countries right now, and people are using them as money, real money. And so stable coins in many ways are sort of the future, the first step towards a total digital currency. But the key there is that they're not volatile. So when you do the remittance that you mentioned, you can actually send money from here to Romania, for example, or to the Philippines or anywhere else, and they get the same dollars that you sent. There's no middleman. It just goes right over the internet, just like you're not charged for an email. So that's revolutionary, and I think we're going to see that expand over time. It also gives rise to a number of legal policy issues that legislatures are going to need to think about, but perhaps we can talk about them a little later in the panel.
Just so I understand, I mean, you mentioned the tether kind of to the U.S. dollar or relationship, but it could be anything of a, sort of a stable value, right? So other currencies or a basket of currency or precious metals.
That's exactly right. So it's a stable coin. There's a payment stable coin, which I think is much more specific, which is basically you're going to use it to buy and sell stuff. You're not going to use it as an investment. Other stable coins, you might say, well, I want a coin that represents gold. I'm not necessarily going to buy stuff with gold, but I'd like to have something that represents gold. But you can have a stable coin that's pegged to the value of literally anything, including a basket. The most obvious use case is fiat currencies like the dollar, like the euro, for example. But you're absolutely right, JC. A stable coin could be based on anything.
Oh, that was great. How about, we're talking a lot of the benefits. What are the sort of the risks or downside of using a cryptocurrency or a stable coin? Are there privacy concerns or we hear about illicit finance? I think we're going to talk more about that tomorrow, but we can touch on that as well.
Well, maybe I'll take the stable coin. So again, a stable coin is basically stable value. It's linked to a fiat currency. And this one's real simple, folks, in terms of foreign policy. Not all stable coins are stable, and not all stable coins are equal. And so you have a major amount of variation in these stable coins. And again, they're in every one of your countries. In some cases, there's literally billions of dollars or euros sloshing around. And if they're issued by someone who is unregulated, who doesn't actually have any assets backed by it, there are some stable coins called algorithmic stable coins, which are fascinating. They are fascinating. If you're holding it and the value plummets, it's not too fascinating. But basically, they're not really backed by anything except mathematical formulas. And so you've got to be really careful in terms of policy and saying, if they're going to use it for payments, if it's going to become part, almost side by side, your national currency, what's backing that stuff? So my firm, for example, Circle, is regulated in all 50 states. We have a money transmitter license from the U.S. federal government, and you can go to our website at any time and basically see everything that's backing up our reserves. So if we have 25 billion issued, you'll see we've got X amount in cash, we've got this amount in a money market fund that's run by BlackRock, and here are all the CUSIP numbers for our treasuries, literally the treasury bonds backing this stuff. One of our competitors, well, many of our competitors that are based overseas in opaque jurisdictions, we have no idea what's backing those dollars. And so that's a major public policy concern because it can lead to consumer protection risk, financial stability risk, and other things as well. Another risk is obviously hits close to this group home is anti-terrorism, money finance, counter-terrorist finance. Many of these dollars they're being funneled to Hamas, to other groups, and there's no AML CTF. So again, a firm like ours, our customers have to go through the same screening that the banks screen their customers on, but a lot of these people in different jurisdictions don't. So there are a number of risks that come with this, despite the great, I think, technological benefits and the fact that I think it's going to be much better for users in the end. We've got to have our eyes wide open to the risk. Not too much to add on that account. Obviously, the EU was a first mover in this area in many ways. The UK is some very promising sort of proposals that have come out that they're working to finalize based on their recent legislation. And then I'd also say Asia. Singapore, Japan. A lot of countries are moving forward. The UAE, for example, has just come out with, at least on stable coins, sort of a proposed regime. So everyone is moving forward here. I think it's a tough one because you want to make sure it's great, but I wouldn't let the best be the enemy of the good, because clarity at this point, I think, is better than no clarity, and they can always be tweaked over time. But I do think it's important, just for consumer protection of reasons alone, quite frankly, to have some legislation in place. As far as the U.S. goes, just maybe going back to there, everyone in this room is probably familiar with Winston Churchill's famous quote that Americans will always do the right thing after they've exhausted the alternatives. And in some ways, you come here to the United States to, for us to share with you what we're doing on this, that, and the other. This is one area where, quite frankly, we can learn from a lot of your jurisdictions what you've been doing. But the United States will, it's not a question of if, I think it's a question of when. We will pass legislation because it is needed in certain areas. My guess is that payment stable coins comes first because it's simple, it's less complex. A lot of the issues about security versus a commodity are not at issue there, but ultimately we do need a market structure bill as well, and there's some very good models that have been proposed. So that may be a thing for future forums, but right now I would say, unlike other areas like counter-terrorist financing, AML, CFIUS, this is one area where the United States, quite frankly, is behind.
Yeah. So the risk, I think I'm here of over-regulating, so that may be driving innovation overseas or other jurisdictions. And but there's the old saying, if you can't beat them, join them. So you also see governments now pursuing their own digital currencies, what we call a CBDC, or central bank digital currency. So now there's, I mentioned earlier, some thousands of different private digital currencies. The government say, we'll get a piece of this too. And so almost every country, at least the developed world, is looking at a digital currency, a CBDC. The U.S. is looking at it. I think I heard where Italy and South Korea just put together an MOU. They're going to collaborate on a CBDC. So lots happening around the world. I don't know, let's jump in first and give some thoughts on a CBDC. And is that something that, given it's it comes from a central bank, does that crowd out a private digital currency, or are there other benefits or risks to a CBDC? How about you, Heath?
So interestingly enough, the question becomes, of course, you're talking about tokenized dollars, digital dollars. Well, why not the Fed? Why doesn't it put out digital dollars, right? So CBDCs, really, really fascinating subject. What I would say is there are both promise and peril there. First of all, I think it's a good sign that central banks around the world want to advance it technologically. I don't think any of us wants our central bank to be, Luddite in form and sort of, existing based on technology that's 30, 40 years old. But at the same time, I would say it raises a lot of profound public policy concerns that we've never had to confront before. Case in point, China. Another case in point, Russia. Both of them realize that being able to issue your own currency, where you can track the behavior of every single citizen, is a powerful surveillance tool. It's a powerful tool to be able to run your society and make sure that it's consistent with the party. It's a powerful way to infiltrate other countries, to bring your currency into Africa and other places like that, create dependencies, all from a single central bank in Beijing, for example, right? And so a lot of Americans look at this, as well as others in Western democracy, and say, hey, wait a minute here. I don't think I like this. I don't like the idea of having every single transaction be potentially subject to government surveillance, because once it's there, once the government has issued these coins, it's there in their computer system. They can track everything. So people obviously are aware of that. I think there's a question of, can we have two types of tokenized dollars or euros or whatever the currency is, one that's maybe a wholesale model issued by central banks, and one that's a retail model where for example, private stablecoin issuers, where their coins are backed by the central bank coin, are issuing out into the public. The other big issue is an economic issue. If everybody effectively has an account at your central bank, what does that mean for your banking system? Private banks are very concerned, as you mentioned, that there's going to be a crowding out effect. So that's another economic effect of all of this, putting aside the civil liberties, the surveillance, and everything else. So that's just a little sprinkling of the kinds of issues that are arising with the CBDC debate, which is fascinating.
To your question, I've heard this before where we can't out-China China, as you say, a very important point, but should we be more concerned or accelerate our own CBDC program? Because China may be out ahead of everybody else, and they're going to do it first. And is it a national security issue where not only they have their digital payment system centralized, but they're requiring other states and companies that do business with China to use that, and could replace the U.S. dollar or other currencies as kind of the main way of doing business. And so, is that an issue, or is that even a reason for us to do anything differently?
I would say the reason we have achieved as much as we have in the United States and in your countries as well around the world is because we've used our democratic system and our free enterprise system together to harness the power of private enterprise and private endeavor. Again, two national goals, and that's the reason we won World War II. I think that's the reason we won the space race. And so there is something to be said here. Your point is a phenomenal one, which is, hey, wait a minute, if China and Russia are really interested in this stuff and they want to dominate the blockchains of the future, then it's probably pretty important. Maybe we should be doing something about it. And I think my view would be, rather than have the government step in and say, we'll take care of it, is to provide the legal clarity, the other sort of, the sound regulatory framework that's needed to allow these entrepreneurs and other market participants in our various countries to rise to the occasion. And ultimately, my view is that innovation and the work of a democratic free enterprise system will ultimately leap ahead of whatever technology the state decides that it wants to research and build. My last stint in government, one of the big projects that I worked on was advising central banks from various regions around the world deal with the challenge of dollar clearing in their countries. They had a situation where their local banks were getting basically dropped by the big US banks. They weren't being able to get access to dollars. And that remains a big issue. Well, one of the things that dollar stablecoins does is it alleviates that issue. So in Georgia, for example, is it the lari? The currency, you can get a bank account in the local currency. It's harder to get one in dollars. It's harder to get one in euros even. And so by having stable coins, US dollar, again, they have to be backed, they have to be well regulated, that can serve as a way to alleviate the dollar clearing strains on your banking system and on your industry that want to interact with larger economies like the European Union or the US. So that's sort of another variation, but it's an older economic problem, but it's a way where I think blockchain technology can be helpful.